Investment banks serve as intermediaries that connect buyers and sellers of securities, thereby providing liquidity to markets. Their actions help promote stability in financial markets while making it easier for companies to raise capital and grow their business, all which contribute positively to the economy. This is Digi Fusion addressing you regarding investment banking. First of all, let's know what is investment banking. Investment banking is a type of banking that allows you to organize big financial deals, like ensuring an IPO goes smoothly or managing foreign currency risk for clients. Today, banks may help companies raise money in many different ways. Some of these include helping corporations or municipalities issue new securities and managing their initial public offerings (IPO). Beyond these aspects, banks often provide advice on things like all investment banking professionals do is advise clients on what, when, and how much to invest. They also provide safe storage for investments at the appropriate rate of interest. Now let's talk about the key takeaways of investment banking. Investment banking helps companies, governments, and other entities raise money. Investment banking activity includes underwriting new debt and equity securities for corporations of all kinds. Investment banks will also facilitate mergers and acquisitions, reorganizations, and broker trades for institutions and private investors. Investment bankers work with corporations, governments, and other groups. They plan and manage the financial aspects of large projects. From 1933 to 1999, U.S. investment and commercial banks were legally separated by the Glass-Steagall Act, which was repealed in November of that year by Congress. Let's understand investment banking. Financial institutions like investment banks are involved in all aspects of the finance industry. They provide new debt and equity securities, assist in mergers and acquisitions, reorganizations, or broker trades. They also advise issuers on the issuance of stock to raise capital for their company's growth. Many large investment banking systems are affiliated with or subsidiaries of larger banks, and many have become well-known names. The largest being Goldman Sachs, Morgan Stanley part of Citigroup, J. Morgan Chase part of JP Morgan Chase & Company, Bank of America Merrill Lynch. But the question is, what do investment banks do? Investment banks can help with large, complicated financial transactions. They may provide advice on how much a company is worth and what kind of deal would be best if the investment banker's client, often a corporation, is considering an acquisition or merger. Their services include underwriting new debt and equity securities for all types of corporations, providing aid in the sale of securities, such as by listing them on stock exchanges, helping to facilitate mergers and acquisitions, reorganizations, and broker trades for both institutions and private investors. They also may issue securities as a means of raising money for the client groups and create the necessary U.S. Securities and Exchange Commission SEC documentation for a company to go public. Now, let's discuss the bottom line. Investment banks play a critical role in the financial world. Goldman Sachs and Morgan Stanley are among the most famous names in this field, and their services help clients with large or complex transactions. It provides financial institutions with various services, including helping to underwrite new debt and equity securities and aiding in the sale of these securities. It also helps facilitate mergers, acquisitions, and broker trades by providing capital formation expertise. Investment banks advise companies on how to go public, and then raise money for them by selling shares through an initial offering of stock. If you liked the content, just hit the like and subscribe button and turn on the bell icon to get updated of such amazing content as soon as we post it.